Welcome everyone. It's about that time. So we're gonna jump on in and get started. We have a great webinar planned for you today. We're really looking forward to an informative conversation and demo, as well as a lively discussion. As many of you know, manually tracking commission or using a legacy system presents complex challenges, especially during auditing. But moving commission data from one system to another is time-consuming and prone to human error. But fortunately, Spiff has a solution for that, and we're just really excited to dive into some of those complexities and how Spiff may be able to help you and your organization. My name is Brita Hurley. I'm the VP of Product and Customer Marketing here at Spiff, and I'm so thrilled to be joined by Raphael Breeze. He is our Chief Product Officer here at Spiff and is truly an expert in this space, having helped build solutions for both finance and accounting folks in multiple organizations before arriving at Spiff. So excited to have this conversation with you, Rafi. Before we jump into the meat of this, just a quick reminder that this webinar will be recorded and sent to all participants within the next 48 hours. And everyone is muted, so if you do have a question, which we really encourage, please use the Q&A feature to drop your question in there. We'll be answering some along the way, and we'll save plenty of time at the end to answer your questions. We also really encourage you to reach out to the Spiff team after this webinar or your CSM to continue those conversations. So today we'll be covering a brief framework of commission expensing, followed by what really differentiates Spiff in the market. Rafi will then take us through a really thorough demonstration in the Spiff platform. And as I mentioned, we will definitely save time for all your questions. So first off, what is ASC 606 and why are we talking about it? Why is it important? So this is an accounting standard that requires the capitalization and amortization of commissions paid out on revenue that's recognized over time. So if your sales team is selling annual or multi-year contracts and you pay out commissions on those sales, you need to be ASC 606 compliant. It's super important because revenue and commission expense are the most heavily audited and scrutinized sections of financial statements. And this requires a lot of work for accounting teams. It could be a painful and substantial undertaking to calculate and report on this in preparation of an audit. So for example, when a company is going through an accounting audit, there really are 5 main objectives that they need to meet. Validity. Is that a valid commission paid on a real deal? Completeness. So do we see all of the commissions paid? Valuation would be really looking to understand if a commission amount is being capitalized or amortized correctly. Presentation, you want to really understand if the commission capitalization or amortization entries are using the right chart of accounts. And finally, with cutoff, you're hoping to understand if the capitalization or amortization are recorded on the correct fiscal period. So Rafi, really thinking about those 5 audit objectives, I'll pass it over to you to walk us through how Spiff helps companies prove compliance and meet all of those objectives. Over to you.
Thank you, Brita. So yeah, the 5 audit objectives, it's not only for external audit, this is good also for internal control. Those 5 objectives are not specific to ASC 606. This is for all the accounting information and financial statement generated. So what we did on this visual, we listed the 5 accounting objectives or audit objectives, and we listed below what are the features that are delivered within the solution today to address those objectives. And I'm not going to go through all those bullet points. I will demonstrate most of them during the demonstration. But if we want to call some of them that are just a bit more, I would say, superior in terms of design, when it comes, for example, to the cutoff, we have dynamic and separate dates for capitalization start and start date, and expense amortization and start and end date. So it's really flexible. It's dynamic, meaning that we can refer to a field and automatically it will increment. So if we are looking for a monthly, a quarterly, or if there are various dates on the contract, so you don't have exact, like it's not 3 years, it's going to be 26 months. That will be, this engine will be able to accommodate standard contract and also one-off and variable duration. In terms of all the other ones, there is one that is very interesting. You may see in the solution an option to include or exclude 0 lines. And this is just to ensure completeness. So this is the one here. You may want to turn it on or off if you want, just to make sure that you have all the commission lines across portfolios. And once you have the totals that are equal, then you can remove the option. You will not generate the 0 lines into the report. That will be aggregated anyway at the balance level. So we won't see them in aggregated. I'm going to move to the next slide just to explain it all more, what are the key differentiators of our solution. And we put them in 3 buckets. The first one is definitely on market, most flexible with ease of use. The idea of the solution we are delivering is to allow our customers to build reports without, the help of additional consultants or doing customization to add custom fields. We will demonstrate it. It's one-page configuration and it's one report that we are running, which can have different pivot and different aggregation. I will demonstrate this. And we are using a portfolio approach. And the portfolio is a way for us to group certain rules. Like, for example, we could put, and I will demonstrate, adjustment into a portfolio. Then we can do ASC 606 into another portfolio. If we want to do GAAP, we will report only on one. If we want to do non-GAAP that includes the adjustment, then we will combine the 2 portfolios at runtime. Our customers can use the portfolio to handle multiple accounting standards. They can use a portfolio with corporate GAAP, for example, and if there is any statutory accounting rules for a country, can be isolated into a separate portfolio, and then we will group them. That will be the statutory for a country, and if we remove the local adjustment, that will be corporate. But our customers sometimes are putting also the legal entity in the portfolio. Sometimes they do it also by currency. It's really extremely flexible design. It's true real time. So some solutions on the market will require to import data between your commission system and the commission expense accounting engine. With us, it's real time, directly plugged onto the commission data. It's not a bolt-on. There is no batch reporting. Once the data is basically queried real time, there is no delay except the loading time for the number of lines you want to bring into the user interface. But it's all real time. We can handle volumes. So when we load accounting lines into the report, you need to count a little less than 1 second per 1,000 lines. So I will demonstrate today reports of 8,000 lines. I have another one of 18,000, but basically they load extremely fast. And this is, again, real time. All the aggregation that you will see do not have to be predefined. You can do them directly into the reporting tool online that I will show you. And when you export, you can keep the details, or you can export in pivot table, or you can export in group data, and I will demonstrate this. This is, for us, we believe this is the lowest total cost of ownership. First of all, because you can use this solution for multiple personas. And in the demonstration, we will go through accountant persona, then a financial controller, then we move to audit. and still using the same solution, and sometimes we can use even the same report. We will see in the demonstration how easy it is to add custom fields. This will require, with other solutions, customization. So as soon as the customer will ask for additional columns that were not provisioned into the report, generally with other solutions, that will be white glove approach with a consultant doing a customization. So it's not readily available. You will have delays. If you forgot a column, it may create some stress. We believe that this report will definitely reduce audit fees. First, it's a read-only, but then the ability to slice and dice the data very fast online, be specific on a payee, a rep, or a specific payout rules, or a specific plan, or a specific customers, and look at all the data. So this will be, if you want to provide, a report to the auditors, they will be able to just do all the controls they need to do, like verifying, those 5 audit objectives. And then, yes, so the report itself can serve multiple audience, and we can move to the next slide, which is basically the order of the demonstration. So today we are going to start as an accountant. We are going to create a report together from scratch. So it's like imagine, maybe the chief accounting officer just resigned. You are on the accounting department. You need to close the books, and the CFO needs to have the accrual for commission expense. And you are left with the tool. So we'll do this demo first, and what are the controls that the accountant can do on the accounting and the reporting. Then we'll move to a different hat where we are going to be more financial control and pulling some analytics directly from the report to get, for example, what is the total commission that we paid to a specific rep, what is the net between everything that has been capitalized, everything that has been amortized, so what is the remaining amount to be amortized. So we will just go into the report and manipulate the filters there. And then for audit, all those ad hoc questions that can come from the auditors. In the deck that we will share later, we listed the top audit questions asked generally by auditors, and this can be internal audit and external audit. So I think it's time to jump into the product, and if you have questions, you should use the chat window of the webinar. So let me share my screen and let's go directly into Spiff. So I'm just going to select here, and hopefully you can see my screen. Yes.
Yes, looks good, Rafi.
All right. So for the demonstration today, we are going to focus on the account executive population. We could create folders, account executive, manager, VP. Again, we can leverage folder for that. So we are going to look at an account executive from the enterprise team. So we have 2 plans. We have mid-market and we have enterprise for account executive. Carlos here is part of enterprise. His bonus has 4 components, and you see them here. The first one is getting compensated on software deals that are listed here. This is the standard functionality of Spiff. I just wanted to show you what we are going to report on. He's also getting compensated on services deal. We will exclude them for ASC 606. And then he has also kickers or accelerators if Carlos signs a multi-year deal and if the deal is a net new business over $20,000. I want to bring your attention here that in those deals that are over $20,000 new business, it's a mix of service and software. So we just want to capitalize and amortize on software. So we will put in the rule to take only software and exclude services. So this is what I'm talking about, the flexibility to apply low-code formulas, the same that you're using in Designer to configure the accounting engine. Something also that was done for Carlos, we entered a manual adjustment on his statement of January, and we will show you how to bring or not the adjustments. Those adjustments, if they are not attached to a specific customer or revenue contract, per ASC 606, we can't capitalize or depreciate. So this is why I was talking about GAAP, non-GAAP, true up. Those are the flexibility of the tool, is to combine portfolio to get you the totals that you are looking for. So now let's go into the tool itself. So expense report, this is the main menu for everything related to commission expense. Here we have the legacy. So we did not remove the V1 and we introduced the V2 here that I'm just going to use now. So we are going to close January this year. So I'm just going to name this report January 2023. The report time frame, I'm just going to select January 1st to the end of the month. So I just like to take the selector here. It's already set to the end of the month. And this functionality here, capitalization time frame, allows to bring carry forward balances of commission that were capitalized prior to the report, but we are still depreciating them. So we will see the opening balance, how much amount has been carried from the capitalization and the accumulated depreciation. So here, I'm going to set on February, and the reason why is we created demo data in January, so I won't have opening balances. But if I take February, I will have open balances because I don't have data prior to January. So accountants, they will understand what I mean there. So I'm going to just select, one of the portfolio, which is account executive. So this is for two plans, enterprise and mid-market. I'm just going to apply here and save the report. So it starts like this. We enter a couple of parameters. And then we get into this report that is pulling immediately the data. So it took 2 or 3 seconds. So I think this report is about 4,000 or maybe 5,000 lines. And the first thing that you will see on the report that comes, as you open it, is a detailed list of accounting entries. So if I pin this column here, and I just navigate through the lines, an entire line, we see all the details. Those are the 18 columns that we use to deliver out of the box in V1, and we will see how we can add more. But there are the individual debit and credit line for each of those ledger accounts that we are using, and this is combining right now capitalization and amortization. If you want to see the balances, so first of all, you may want to ensure that the debits equal credits. So you can just open the column panel here on the right. We are going to select entry type and just group by entry type. So if I go back here, let me just unpin this one. And what we will see here is exact number of debits and credits, and the amounts are perfectly balanced, so they end up to 0 at the cent. And then you may want to verify, so are we balanced by everything? So for example, are we balanced by customer account? So I'm just going to put customer account here, and the fact is showing 0 is good. So it means that if I open it, then I will see all the debits and the credits, but then you say here, but which account are you manipulating there? So we can select journal account name and just put it, below account. And now it's going to give us the breakdown on deferred commission asset. That was our capitalization against, an accrual that needs to be clear with payroll. And here you have the depreciation lines. So when the accountant wants to close the book, they just want to know what is the journal they need to put in the general ledger. And generally, if you want to pass an accounting entry is aggregated, we can just look at, this aggregate here. And what we see, there are 3 important columns. I'm just going to remove, for example, this one so you can see a little better. I'm just going to expand a little more here. And this is the accounting, this is those are calculated fields delivered by Spiff. There are more into the columns. We have remaining amortization, how much was amortized during the period. So this is computed by Spiff. So it's more than just a report. There are some calculated fields. 3 fields that we added this year in the V2 is the ability to have an opening balance, the activity on the period, and the closing balance. So here on this, if we will have to book an accounting entries, assuming that we were doing carry forward in GL, those are the entries here. So you will do a debit on this account for this amount. That will be for January. I just look at again, the time frame we are looking at for this report. And I'll go back here. And if we have customers that are reversing those entries on the first day of the next fiscal period, in that case, you need to carry the opening balances and the closing balances of your capitalized. So if you're reversing your ASC 606 entries at the first day of the next period, just to get the snapshot, to close the books on the previous one, then you will have to look at this column. So you carry the full amount instead of just the delta for the month of January. So right now, what we did group by journal account name. We may want to have also the customer account. So if I break down now here, I will see customer account. And again, I can reopen. So I'm going to remove the entry type because now we know that everything is balanced. So of course, it's a debit entry here. And the same technique, we can again move and we can add unlimited number of groupings here. But for the purpose of the demonstration, I'm just going to do account and reps. So it means that here we will have account and then we see the reps and we see how much commission has been capitalized since the first day of the start date of the report, how much was added to during the accounting period. We can see David and we didn't have any additional business, with this customer called Aris. And I'm just going to run and save just to keep, the structure. So when we run and save, the report is going to keep the groupings, is going to keep the filters, is going to keep the order of the columns that you can reorder at any time here just by drag and drop. For example, you can add this and we can export directly from this report into Excel. So you saw the message that is going to let me know when the report is available. So generally it should go pretty fast. So I don't know if you can see my screen, but maybe I need to stop sharing and reshare so you can see the file that was generated. So I think I need to stop here. I need to go back to my tab here. Let me share here. All right, so I think you should, hopefully you can see the file. Yes, you confirm,
Yes.
Rita, because yes, perfect. Yes. So you remember we were doing some grouping. So if we want to get only the totals, that was on the screen. We keep all the subgroupings below. So we just need to navigate through this navigation here. This is not a pivot table, just to show you that the groupings are left and we have all the details that are brought into the report. If we go back, so I need to stop sharing here and maybe go back to
And Rafi, we have a couple of questions that have come in. One specifically around this export. A lot of great feedback about the speed of the report and how quickly the system is running. But if we wanted to work on this data in Excel, how would we do that from within Spiff, and what does that report look like?
Okay, so the first, we exported a list view and grouped in Excel. I'm going to show you that you can export even using pivot tables in Excel. So first, the export, but plus something very interesting is each time you press the export button, we keep a snapshot of the report. So we store it into the database, so you can run it at any time. You will pull the data at the time when you run the report. So if you do end of month. If you run the report into a certain structure, we store it when you export it. If you change again the filters on the same report and you export, that will be a second snapshot, and we will keep the full audit trail, and then you can pull in Excel immediately. So I want to show you something that is, I think, extremely solid on this functionality, is the way you can add additional fields. So here, for example, we were very happy with the accounting, but when we look at the lists of the fields, then we remember the CFO wants to have a breakdown per opportunity type. We remember that auditors were asking for the quota of this payee. And as you can tell, those information are not carried into the file today. So what we do is you press this little button, and then suddenly you can select way more fields. The fields that are not needed for accounting, but are needed for the context, or maybe needed for subsequent analysis. So we talked about the type. So I'm just going to bring the opportunity type. It's here. We said quota. So let's bring the quota, the annual quota, and you have way more fields you can bring. As soon as you select those additional fields, they show up at the end of the report. It's up to you if you want even to bring them higher into the list, for example, here. But what's happening is it's not populated yet. So if I look at, for example, all the details of the report, we can see the opportunity type is not populated. And the reason why is because you need to run and save. So we are going to do it. So this is the customization self-service. Normally, a consultant will go in the back end, append a new column, populate the column with a mapping, and bring the data into the report. Here, we didn't have to do any of that. We selected additional fields. And as you can tell, when I run the report a second time, now it's populating the opportunity type. To the extent that if we want to pivot or just look at, so I have opportunity type here, and now we can see for new upsell and churn, now it's already you had the ability to pivot on those additional custom fields. One of the fantastic functionality also is to move to pivot table. So if I click pivot here, now we are in pivot mode, and the pivot mode allows to export in Excel in pivot table. So I'm just going to run this report to make sure that it's going to save just the last modification I did, moving to pivot, and I'm going to export it. So in pivot, I don't know, it takes a little longer, but generally you should count less than 1 second per 1,000 lines. So if you have 50,000 lines you want to bring in the UI, that will be around probably 30 seconds. So you need to be ready that this is going to take some time, but this is way faster than importing the data on one side, then run the report in batch like some competitors do that. So here we have now a pivot that is organized that way. We have opportunity type, then we did put ledger account, then we have customer account below it. If I export to it, and that was the question that one of the attendee was asking. So it's giving me this message that is doing the export. The export is coming, and I'm going just to reshare my screen. So I need to stop sharing here and go here. And do share here. I need to go Windows. Here we go. So now this report is, let me just expand a bit if I can. And what is very interesting now, it is we exported it in pivot. So it did populate the pivot table of Excel because we switch pivot table into the online report. And then we can also check, you brought, for example, the additional fields here. That is the opportunity type. I'm looking at the wrong screen. Sorry, because this is the screen sharing. So I need to navigate here. And you remember we were also looking for quota information, and you can see this column was also brought. So now I know the quota for Carlos and Omar. That was an additional column. So I hope I did answer your question. And as the pivot table in Excel are working, is we keep the detail on the first tab. So I need to click here, and you see the entire detail. And here we are going to count the lines. So this one is 5,672 lines of details that was brought into this report. So this concludes the first demo, and I have a second one I wanted to show you, which is more the financial control. So I'm going to stop sharing here. So let me just go.
And Rafi, while you're switching screens again, I'll ask another one of the questions. This one's regarding portfolios. So you had briefly mentioned portfolios, but in terms of organization, what are different types of ways that they can organize their portfolios? For example, are they able to do this by currency or legal entity?
Yes. So the purpose of the portfolio is to have groupings of certain types. So it can be legal entity, it can be currency, can be also a combination of the two. It can be maybe you want to have a portfolio for net new renewal. So it will fit your needs and how complex and sophisticated is your accounting. If you need to manage multiple accounting standards, you can use the portfolio again. The way we have defined some of those portfolio, I'm just going to bring you to the configuration there. So we were looking at the AE plan 3 years, and here I'm making sure that I am bringing only software. But then we created, for example, I wanted to have the manual adjustment separate. The reason why is I don't want it to be included right away in ASC 606 because it's not compliant if you cannot attach it to a specific revenue contract. It can be an impairment of assets, but again, it's a different way to handle it. And we have seen customers having legal entities, and then below legal entities, they had also currencies in case the legal entity in the country is doing business with another country. So it's very, there are probably some best practices coming from services. We have the install base already using this portfolio functionality. This is coming from V1. We added a little more options here, the ability to recalculate manually, just in case you did a modification in the formula and you want to make sure that everything is set. It's maybe not required depending on the change. And on this, we also tracking the accounting entries that we need to put, the one that you saw in the report. So portfolio extremely flexible. It doesn't going one way, like for example, putting legal entity doesn't block you to use another portfolio if you want to do corp ASC 606. You can create as many portfolios as you like. You just need to make sure that you don't report twice when you book the accounting entries. So I was just going to go back to our reports here, and now that we would like, I am a financial controller, I would like to know, so I know that we have capitalized so much amount, we have depreciated so much amount, but I don't know what is the net. So here I'm just going to use a filter, and I'm going to select this account and this one. So how much we have capitalized.
Rafi,
yes.
Rafi, we're still looking at Spiff Designer.
Okay, so let me just reshare my screen. I apologize for that. Oh. Sorry. You can see. All right, yes. So this is the report we just created, when we started the demonstration. And what we want to see now is the net. So I want to know exactly how much we have capitalized minus how much we have accumulated in depreciation. That will give you the net. So the way I'm going to do that, it's just selecting two accounts here. I'm going to select 1755, which is the capitalization. And I'm going to select in this report the accumulated depreciation. if I apply now, I have only 2 lines. But if I group here by customer, by account, for example, account is here, I'm just going to move it up. So what do you see now? Here I'm going to extend so you can see. I'm going to pin also this column left, so which is very useful. I'm just going to remove this. Maybe I can keep it. But anyway, here I have customer accounts. And now I see the net. So I see how much I have capitalized, how much I have depreciated, how much did we add during the accounting period, the activity here, and how much we depreciated more based on the older contracts, and what is the balance at the end. Okay, so here, when we select only 2 accounts, we know that all the debits and the credits are equal. So the reason why I was confident to select only 2 accounts, because I know there is no room that this will not be balanced overall on the accounting entries. But then if I want to see the net, this is just a little technique that allows you to have those net amount on the first line just by selecting those 2 accounts. Now we can look at it per rep. So you see I just drag and drop here. And now, so I'm just going to remove account, for example. And now for the reps that are included into this report, I know, for example, how much Carlos has received as commission up to the start date of the report, how much more commission we paid to him on additional deals, and you will see the details, obviously, if you go here. Okay, so apparently there was a brand new customer because there was no balance before. And the same for how much did we depreciate. And we have all the details available there. And again, we have also the depreciation schedule. I can show it to you on a longer period. Here it's 1 month, so it's going to show you only 1 month but we have the full depreciation schedule. Let me bring a larger report just to finish on this. I think I talked pretty much about everything. The fact that you have also those menus here, for example. I give you an example. If I look at, for example, the to show you the ease of use, I'm just going to aggregate on payout rules. So I'm just going to go there. I'm going to say group by payout rules. And now he added the payout rules. Those are the free payout rules. If you remember, we were not taking in account pure services. That was SOWs. They are not ASC 606. Sometimes they can serve, premium support. This is good to include in ASC 606. But just in the column navigating, you're able even to bring the grouping. You can freeze more than 1 column. It's extremely dynamic report. And again, we are manipulating here. I think it was like 4,000 lines. So I'm going to do a pause there because I'm going to show you something that is, I believe, superior. Is as we are configuring commission expense in Spiff, we have already brought all the objects for the revenue recognition. So we pump the data from the opportunity. We may have a TCV, we have the ARR, you may have SSP allocation at the line level. We can do line level in this report. So we created a report called revenue recognition. So I created a portfolio. So I may have a RevRec only. So I just wanted to show it to you. So this one is RevRec. So the same mechanism. We are using the configuration. We pick the amount. We know the capitalization date for the revenue, for the unbilled revenue, and we know when do we start depreciating or recognizing the revenue, which is exactly what's happening there. And again, all the details are populated. And if I just ask, by journal name here, I'm just going to expand here, and I'm going to put account here. All right. So what we are going to see is this is my unbilled revenue. So we see the revenue that is in the balance sheet that I am allowed to recognize over time. So I see here the opening. Did we add any business there? And what is the end balance? And here we see also how much has been recognized. So you can see here the amount of how much we did recognize. And one of the beauty of using a portfolio, and I think you understood, is that now I can group the two portfolio, commission expense and rev rec. So follow me in doing this. I'm just going to go in expense report. I had prepared a Q4 rev rec and commission expense. So how does that work? So this one brings way more lines. So it does compute revenue recognition. I just brought the two portfolios. Okay. And this allows us, if I go by ledger account, and maybe we are just going to add a customer here. Okay. So for example, for this customer, any of them, so I'm going to open Tanium, for example, we know just going, so then you can sort also within the columns and it will sort the subsections. Just wanted to mention that. So I was on, I don't know, I'm going to open just one. So we see here how much revenue has been put into the balance sheet, how much we have recognized over this revenue at the time of the report, how much more we are recognizing into the period. And here we have our commission expense. So what does that mean? It means at this level here, and this can be opportunity type, rep, we for the first time, we are bringing rev rec and commission expense on the same report, and ability to do aggregates and see basically the full picture. Generally, rev rec sits into a different system. Sometimes it is still in spreadsheet. Commission expense sits into the commission software, and this is the first time that we are bringing. First time, I mean, in a history of those solutions where you can bring both rev rec and commission expense with all the details. I think your auditors will be very happy. So then you can tie commission expense with the related revenue, which is something that is super hard to do if you have to do it in two different systems. And moreover, we are bringing the full depreciation schedule. So of course, I need to take one that has good data. So I'm just going to pin this column here and see if we find someone in the, so we have 3 months in this report. And of course, if I expand any of those lines, so I would say the depreciation and the recognized revenue, you can see both schedules, basically not side by side, but in the right time period for the columns here. So that was a demonstration that is to tell you that you can use our commission expense solution to configure rev rec if you are a subscription business. We believe that if you have already configured Spiff commission, you are bringing pretty much 90 to 95% of what we need for rev rec. And you can still add a little more fields. If we were not bringing the TCV, the total contract value, if we were not bringing additional parameters are needed for rev rec, the way Spiff works, we can just add those fields into the data set so that it's available for reporting. And again, you can export both into the report. So here I wanted to show you this one. And just to finish on the third demonstration, and you may have auditors that want to see this information, not by account, but I want to see it by rep. So we just select rep. So now we have a list of rep here. And for each of those rep, I know how much revenue they brought, how much commission was paid. And of course, if we started depreciating any of them, we will see those amounts here. So I am in the middle of the report, and just need to go back to the 3 columns here, and you see the full detail. And then you can just go and see to the deal account level. There is no limit on the way you can group the data. So I think this report is, we are going to do a large report. Like let's do a 18,000 lines report to see how the system is going to react. Okay, and of course you could export this one, but let's go. I think I did a December 2022 on 3 portfolio. This one is going to bring 18,808 lines. So it should take about 10 seconds. So you're all waiting with me. It should come online. And you need to remember, this is 18,000 lines that we are bringing to the UI that are immediately available for aggregation. So this is done. And again, so I don't know, this one, I think I didn't have the opportunity type, but again, I can do it per customer accounts. So it's, of course, it's 0 because I have debit and credits. So it's all balanced. And I just wanted to show you how this report reacts online. It's extremely fast. Everything is loaded in the UI. Of course, we have technology behind the scene to make it happen. And all the list of the export, I was talking about the snapshot. So I'm just going to be start. And you see all the previous export at what time they were done, but it keeps the snapshot, meaning that if you did a different grouping between 19 and 20, there will be 2 different export files available. And this is immutable, meaning that you can always refer. If you did modify something into the spreadsheet, you can just go back there and re-export it, and you will find the exact data that was on the report as of the date you were running it. So that was, a quick tour of expense report. We believe is extremely powerful. In the slide deck, maybe I can go back there just to, and if you have questions, do not hesitate.
Yeah, I can jump back in, Rafi, and share our final slides. But thank you, everyone, for the questions that have been coming in. Feel free to continue asking. We just have a few things to wrap up here.
And yeah, I didn't demo how to add the adjustments, the manual adjustments, but you understand it's a portfolio, you include, you exclude it, and then the same. We'll be able to get all those amounts netted, including the adjustment, in case you just want to do accruals or you want to reconcile with payroll. So the report can be more than just ASC 606. It can help with commission expense, definitely. We can compute accruals. Like even if you don't do ASC 606, you may need this accrual anyway. And then we can bring revenue recognition. So it's extremely powerful. Here are the typical questions asked by auditors, and I was demonstrating pretty much all of them. You can have all the summaries for a given fiscal year, for a specific payout rules or a specific deal. I showed you how we can have for a specific rep or payee. And then I show you how you can use the opportunity type, bring it. If you want to have a breakdown between net new, renewal, ongoing contracts, and adjustment and churn.
Great. And then finally, Rafi, do you want to walk us through a couple of the tips on using Spiff?
Yes. So when you there were questions about portfolio, so you need to strategize how you're going to leverage portfolio, and you should talk to your consultant if you need to have some advices. But you can try out different. For example, we brought cost center, legal entity. We derived it from the rep, because one payroll attached to one legal entity. So we're able to bring the legal entity there. So then you can put them into a specific portfolio, or you just keep them as a field on which you can slice and dice in the report directly. But it's better if you have different general ledger to separate legal entities per portfolio. So then every ledger is getting, the right account. I will let you have a look to the details. We just wanted to make sure you know how to troubleshoot if there is something that doesn't work. Those are the top of the mind things that did happen even to me when I was configuring. I will not recommend that you load more than 100,000 lines, but you can. It's just going to take 1.5 like 90 seconds. But again, 90 seconds means that you can run the report like 10 times in an hour. So if someone does an adjustment, like for example, if we were creating an adjustment on Carlos in January, it's available immediately on the report after. If it is part of a report on 100,000 lines, it will take 90 seconds just to bring it there, and it will be on the report. So you run it as much as you need, depending on the changes. And we don't recompute frozen statements, so just wanted also to mention that. Be careful with the column commission amount, because since I have debits and credits, it double. Right? So don't accumulate on the commission amount column. This is just indicative. So we know the amount of commission that was paid on this particular line, and it is the same on the debit and the credit, obviously, because attached to the same deal. So think ahead also on your naming convention. So you saw the long list of reports. We don't have yet folders, so you may want to have monthly, quarterly, you may want to have fiscal year and accounting period as a prefix. So you need to think ahead, if you want also to have GAAP, non-GAAP, true-up type of report of your naming convention, so it's easy to retrieve them. And then right now, when I select filters, they are not carried into the export in Excel, so you have to re-put them. You remember I selected accounts 1755 and 1759, but then you will have to just re-put those filters. This is going to be addressed. You just need to know we are using a specific open source code to export in Excel, and they didn't have the filters in their pivot. So we are contributing to open source because we are adding the code to make the filters work in the export, and that will be Spiff contribution. And this is coming in the winter release, which is just around the corner in February.
Awesome, great. That was actually one of the questions, so I'm glad we could touch upon that. There's one more question here, Rafi, for you. Regarding dates, are dates dynamic? So for example, would it support proration?
Yes, yeah. So if we go back to the third slide, so we support proration 360 or 365 days. What was the first question? Because proration, definitely, this is in, and you will find it into valuation objective and cutoff. So they are already there. When it comes to the accounting period, or you were talking about the dynamic date. So maybe the best for me to show you in the product the way it works very quickly. So then you will see, let me just share my screen here if I can, up. So I go back into Spiff Designer here. So here on the, so I'm just going to take my 3-year contracts. So I did an expedient here. So I said 3 years contract, so I'm going to amortize on 36 period, but I could have said dynamic. And here we will have selected contract start date, for example, and maybe the close date for the capitalization. I think it's probably more accurate. And then here, start date, I will say contract start date. And here, contract end date, okay? So this could have been a configuration. And here, if you do proration, I think the proration we select, let me see. I think this is the one. Even period, this is 360, and this is 365. So you can do that on the revenue recognition. So because I was simulating 3 years contract, so I took the deal ARR. So pardon me, I could have taken, total contract value. I could have taken so many different fields, but here, as I wanted to do fast probably, and I'm using a function here to start the rev rec 30 days after the close date. So you see, I'm using a function of designer days ago. When it is positive, it goes in the past, and when it is negative, it goes ahead. So here I'm saying all my contracts, I start recognizing the revenue for some reason 30 days after the close date. Imagine there are, I don't know, papers to sign. So those are the things where I was showing you how you can use dynamic dates and even function within the dates. And yeah, so I hope I did answer the question, and we have it. So if we look at, here, and I'm just going to open this one here. You can do it for fringes, the same. So fringes now, you can group them. So fringes is when you want to amortize. This is part of the standard. As part of the commission amount expense you want to depreciate, you are allowed to include employee benefits such as 401k. Some countries, they have pensions, so this is where you will put it. And then I wanted to show this here, the fact that this is a low-code platform where you can put formulas. And this is why it's so flexible. It's almost too flexible, but other software, if they want to account for every case possible, they will need to add checkboxes, or you will need a consultant. Here, because here I want to exclude, the services line. So I selected software, but I'm using a field called product family. And maybe product family is a specific field to your instance. So it was difficult to provision it in advance. And this is why those solutions on the market are a bit behind, because they built ASC 606 in reporting. Whereas at Spiff, we build it in Designer. And then, of course, we have the report. But this is the major differences: ability to put additional logic. We are directly pumping the data from the payout rules. If you remember, I got 4 payout rules, services we don't want to depreciate anyway. So I just took those 3 here. And I could have added more. I could have restricted. I could have done only a portfolio for multi-year that will be multi-year across all plans, because you see I have manager and VPs as well.
Great. Thank you so much, Rafi, for answering that question and for taking us through a great demo today. Thank you to everyone on the line for joining us. Hope you found this informative. Please feel free to reach out to the Spiff team here, whether it's your account executive or CSM. We're happy to continue the conversation. We're excited to continue the conversation, and we will send the recording over in the next 1 or 2 days. Have a great afternoon. Bye-bye.
Thank you, everyone. Bye-bye.